Hello and welcome back to Digital Assets Daily. Good morning, good afternoon, or good evening, wherever you are in your corner of the world. I've got a lot of articles I want to share with you because I think they're very important in the regards to benefiting our digital assets, our investment in our new digital currency in this asset class. I believe all of the articles we're going to discuss today will shed a little bit of light on how important they are. If you're a new investor, you're going to see they are here to stay. It is the new asset class, period. And it is now part of the new financial system. And that's going to be very clear from the beginning to the end of this video. If you are new to this space, welcome and hold on tight. But for you, believe me, it's much easier than many of us pioneers. So let's get right into the discussion. We have a lot to cover. On the IMF blog from today, from stablecoins to central bank digital currencies is the headline. And as privately issued stablecoins continue to encroach on more traditional forms of money, like cash and bank deposits, policymakers will not simply look on from the sidelines. They will arbitrate. Their rules and actions will determine how we will eventually pay for everyday items, like a cup of coffee from, say, Starbucks or Dunkin' Donuts. Those tend to be the two hot items here in the United States, and more importantly, will affect the structure and risk of our financial sector. Our last blog introduced stablecoins, cryptographic tokens that can be easily exchanged, benefiting from minimal price volatility relative to cash. And consumers might quickly adopt these new, cheaper, faster, and more user-friendly services integrated into their social media platforms. However, these also come with notable risks that require prompt regulatory action. The world of fiat money is in flux, and innovation will transform the landscape of banking and money. And one possible regulatory path forward is to give stablecoin providers access to central bank reserves. This also offers a blueprint on how central banks could partner with the private sector to offer the digital cash of tomorrow. And that's called synthetic central bank digital currency, or like the CBDC, as discussed in the IMF's first fintech note. And we did cover that in video. So if you follow this channel, you are quite aware of that already. The regulatory imperative going into whether stablecoins are indeed stable is questionable. Stablecoin providers must privately generate trust in their liabilities, the very coins they issue. Many do so by backing coins one for one with assets of the same denomination. So if a stablecoin owner wanted to redeem her 10-euro coin for a 10-euro note, the stablecoin provider could sell the assets for cash to be payout on the spot. Or could it, is the question. Much depends on the safety and liquidity of the underlying assets and on whether they fully back the coins in circulation. It also depends on whether assets are protected from other creditors if the stablecoin provider goes bankrupt. Will the stablecoin owner get her money back anytime she wants? Question. Even if the peers attempt to sell their coins all at once in a panic? Question. Regulation must eliminate these risks, and one option is to require that stablecoin providers hold safe and liquid assets, as well as sufficient equity to protect coin holders from losses. In essence, the call would be to regulate stablecoin providers despite them not being traditional banks, and that's not an easy task, they have found out. And that goes into showing again and again how they continue to push being backed by something. And the biggest asset we believe in the United States, as President Trump states he wants a gold-backed U.S. currency. And as his pick for the Fed, Judy Sheldon states she would like gold-backed U.S. currency in a cryptocurrency type of way. So another approach is to require stablecoin providers to fully back coins with central bank reserves, the safest and most liquid assets available. The solution is not novel, and the People's Bank of China, for instance, requires giant payment providers, Alipay and WeChat Pay, to do so. And central banks around the world are considering giving fintech companies access to their reserves, though only after satisfying a number of requirements related to AML, connectivity between coin platforms, security and data protection, among others. Clearly doing so would enhance the attractiveness of stablecoins as a store of value. It would essentially transform stablecoin providers into narrow banks, institutions that do not lend but only hold central bank reserves. Competition with commercial banks for customer deposits would grow stronger, raising questions about the social price tag. But there are also clearer-cut advantages. Chief among these is stability, as backing as in perfectly safe and liquid assets. Another is regulatory clarity, as narrow banks would fit neatly into existing regulatory frameworks. Moreover, different stablecoins could be seamlessly exchanged thanks to the central bank settling all transactions. This would enhance competition among stablecoin providers. Additional benefits include support for domestic payment solutions in the face of foreign currency stablecoins offered by monopolies that are hard to regulate, and better monetary policy transmission if pressure on currency substitution were alleviated and interest rates were paid on reserves held by stablecoin providers, however distant the prospect. And the next step is a central bank digital currency, and that's the question. I'm going to get into this full article because it's directly from the IMF, and this is what we are invested in. So this is a big deal, and I wanted to cover this in completion. If stablecoin providers held client assets at the central bank, clients would indirectly be able to hold and transact in central bank liabilities. The essence, after all, of a central bank digital currency. In practice, the coins would remain the liability of private issuers. And client assets would have to be protected against the bankruptcy of the stablecoin provider. The synthetic central bank digital currency, or SCBDC for short, offers significant advantages over its full-fledged cousin, which requires getting involved in many of the steps of the payments chain. This can be costly and risky for central banks, as it would push them into unfamiliar territory or brand of management, the app development, technology selection, and customer interaction. In the SCBDC model, which is a public-private partnership, central banks would focus on their core function, providing trust and efficiency, and the private sector, as providers of stablecoins, would be left to satisfy the remaining steps under appropriate supervision and oversight, and to do what they do best: innovate and interact with customers. Whether central banks jump on board at all is another matter, and each central bank would weigh the pros and cons related to payment system stability, financial inclusion, and cost efficiency, as discussed in a recent IMF staff paper. And to the extent that central banks wish to offer a digital alternative to cash, they should consider SCBDC as a potentially attractive option. And will an SCBDC turn out to be the central bank money of the future? Question. One thing is for sure: the world of fiat money is in flux, and innovation will transform the landscape of banking and money, and you can bet your bottom dollar on it. And as you read through that, the thought crosses a long-term investor's mind over and over and over again, as the example of Ripple, how it has the XRP pool, and when you get into this, they're showing how there needs to be something backing, and then you go into the existing conversation that has been happening over and over, if XRP is going to be backed by something to give it more strength and longevity in the financial world with its trust. The next article, the OCC's crypto custody letter, was years in the making. A federal banking regulator's decision to let banks provide crypto custody services may have seemed out of the blue, but the agency has been looking at cryptocurrencies for years. The Office of the OCC announced last month that federally regulated banks could provide services to crypto startups in addition to custody. And it turns out the OCC was already leaning toward the move before acting comptroller Brian Brooks took the top job at the agency. The next article, the US dollar trading at its worst level in more than 2 years. So the US dollar continued its months-long slide, falling to its lowest level in more than 2 years during the course of Tuesday's trade. At last check, the US dollar currency index was trading at 92.29, a palindrome, in lowest level since April 2018, according to data from TradingView. The dollar's precipitous slide began in March, underpinned by falling Treasury yield and mounting fears of debt being taken on by governments and central banks to quell the impact of the issue at hand. Indeed, hedge funds have turned bearish on the dollar for the first time since 2018. And in the next article, the Ripple's business briefing, virtual currency XRP needs in Japanese market strategy revealed. Ripple, which develops crypto asset XRP Ripple, holds a business briefing on the 18th, and Emi Yoshikawa, the senior director of Ripple's international business division, gave a presentation on strategies for the Japanese market. The overview of Ripple and XRP mechanism, and headquartered in the U.S., Ripple is a technology company that utilizes the blockchain to provide a frictionless international money transfer experience. And the vision is to realize the IOV, the Internet of Value. Introducing Ripple's international money transfer network, RippleNet, allows financial institutions to make reliable and immediate customer money transfers anywhere in the world with cost-effective end-to-end visibility. In the next article, will Ripple's challenge realize zero transfer fees? Question. In Japan, the country with the highest international money transfer fees. And this is because the financial networks of each country are self-contained and closed to each other, and there are many frictions between the networks. Yoshikawa describes this as similar to the pre-internet communication network. Until the spread of the internet, computer-based networks were operated by private companies such as AOL and CompuServe and NiftyServe in Japan. They were closed internally, and interacting with the outside was not easy. For the first time on the internet, these networks were seamlessly connected, and information could be exchanged at almost zero communication cost. The flow of money and finance is the same. Ripple provides a mechanism that enables a remittance with a common API using the company's RippleNet network connection protocol. And these are two types of RippleNet, one that connects banks and money transfer companies in each country, and one that uses a cryptographic asset virtual currency called XRP to send money. The mechanism that uses this XRP is called on-demand liquidity, also known as ODL, and Ripple is focusing on popularizing it as its main platform. The mechanism is simple, and XRP will be the native token of XRPL, the XRP ledger, an open source blockchain like Bitcoin. The financial institution that wants to send money changes the fiat currency to XRP on the crypto asset exchange and sends XRP. The receiver receives XRP and returns it to fiat currency at the crypto asset exchange. XRP ledger takes less than 3 seconds to transfer the money, charges 0.0002, and can process 1,500 transactions per second, and consumes little energy to settle payments. On the next article, expect significant growth in Japan, such as Ripple of international remittances and low-high frequency remittances. And held a briefing online to introduce its business strategy in Japan was the RippleNet Remittance Network. At the briefing, Ripple International Business Division Senior Director Emi Yoshikawa introduced the company's business service outline and current business development and strategy in Japan. Is international remittance still inefficient? RippleNet enables real-time trading in a single step, and Ripple is a company founded in 2012 with headquarters and development in San Francisco. Currently, there are 9 bases around the world, and in Japan, we are developing mainly SBI Ripple Asia, a joint venture with SBI Holdings, and the international money transfer network RippleNet has been developed and adopted by over 300 financial institutions. Ripple has a vision of IOV that realizes a world where money value can be exchanged freely. Blockchain has a wide range of applications, but all interactions lead to value exchanges, and blockchain will not spread unless the problems of the exchange are resolved. XRP is sometimes called Ripple in Japan, but Ripple is a BTOB software company that provides financial institutions with a mechanism of international remittance using blockchain, and it is said that it uses XRP, which is a crypto asset. Ripple engineers are also involved in the development of the open source project XRP Ledger for continuous improvement. Russian bank is said to have issued the country's first crypto-backed loan, is the headline of the next article. Russian commercial bank Expo Bank is said to have issued the country's first crypto-backed personal loan. Russian business daily Kommersant reported the news on Wednesday, saying that the loan backed by Waves tokens was issued to businessman Mikhail Uspansky. Waves founder Sasha Ivanov confirmed the news in a tweet, and the loan value was not disclosed. Expo Bank's head of legal department Tanzanila Yandiva told Kommersant that the loan is a precedent setting for both the legal and banking communities in Russia. The bank reportedly consulted lawyers and crypto experts for the deal and concluded that Waves tokens are other property and not payment tokens. The use of cryptocurrencies for payment is set to be banned in Russia starting next year. And last month, Russian President Vladimir Putin signed a bill that will prohibit cryptocurrencies as a means of payment in the country. The bill comes into effect from January 2021. And also, too, you know what? Let's see if we can just pull it up really quick. That always makes me think of the book here, Wave and Ripples, as allegedly written from Satoshi Nakamoto. So the wave here is obviously Waves from Russia, and Ripple, the company designing XRP. So just some random little thing. Just wanted to show Wave and Ripple design book by Satoshi Nakamoto. Next article, the XRP isn't competing with stablecoins and CBDCs, says Ripple executive. XRP, the world's largest, actually third largest, cryptocurrencies by market capitalization, is not competing with national digital currencies like the forthcoming digital yuan, according to a senior executive at Ripple. And Emi Yoshikawa, the senior director of global operations at Ripple, claimed that XRP does not compete either with central bank digital currency, CBDC, or stablecoins. Next article, a dozen crypto firms can now operate in Hawaii via regulatory sandbox. And in the sandbox initiative, it gives the financial industry, the banking world, the ability to try out the new technology while they are sorting out the regulatory clarity. But again, there's only so much that the ability and capability of options within the sandbox that they can't quite reach and achieve as they could if regulations were settled. 12 cryptocurrency firms, including ErisX, Bitflyer USA, and Gemini, are now servicing Hawaii residents. The firms have been approved by the state's regulatory sandbox called Digital Currency Innovation Lab. The initiative between Hawaii Department of Financial Institutions and Hawaii Technology Development Corporation, the HTDC, an agency for the state of Hawaii. The Sandbox program was launched in March of this year and allows crypto firms to apply for approval to do business in Hawaii without obtaining a state money transmitter license for 2 years. Hawaii previously had more restrictive crypto licensing regimes compared to some states. In 2017, the Hawaii Division of Financial Institutions asked the crypto exchanges to hold cash reserves equal to crypto-denominated funds held for its customers. This bad policy led Coinbase to stop serving in Hawaii, and today the exchange remains unavailable in the state. Binance.us also doesn't serve Hawaii, according to its website, and Bitflyer USA said the Sandbox initiative marks the return of crypto exchanges to Hawaii and could result in exchanges receiving full licenses in the future. If you are in the U.S., probably one of the easiest and friendly for the new investor would be the Coinbase, for example. As I am direct messaged often, how can I get invested in Ripple's XRP and Stellar's XLM? And then Coinbase is the easy reference for most of those new investors, especially in states like Texas or Florida, where you cannot use Binance.us. But believe me, Catherine Coley is working very hard from Binance.us to get all of the other U.S. states. I believe there's still around 10 or 12 that cannot use Binance.us. As of September 2019, I believe, was the month, the regular Binance was unavailable for U.S. residents. So then they opened up a Binance.us for the U.S. residents to be able to continue moving forward with their services, as Binance US is more of a professional platform for experienced investors and traders, whereas we call it Coinbase.com is for more of the entry level and simplicity. But if they do have what you are looking for and you don't want the hassle of the professional platform, Coinbase.com is the best way for you, even though you may pay a little bit higher fees now. If you're holding long-term as a hodler or a long-term investor, then those fees over time are really irrelevant because you're going to gain all of that back. But just to be fair, Coinbase Pro is a platform very similar to the Binance professional type platform. And if you do have a Coinbase.com account, you can log into Coinbase Pro with the same contact information. Coinbase.com and Coinbase Pro using your same email address and your same user password, and you can check out both accounts as you already have them. I want to thank XRP Crypto Wolf at XRP Crypto Wolf for, again, sending in content. Amazing. We much appreciate you, and keep being awesome. Pro-Bitcoin Senate candidate wins the primary race in Wyoming is the headline of the next article. And this is very exciting, as you have experienced people getting involved who are already familiar with crypto and digital assets. So Cynthia Loomis, a former U.S. representative and current Bitcoin advocate, has won her primary race to join the U.S. Senate representing Wyoming. And as many of us who have been around for a little while, most of us did come in through Bitcoin. And then over time, we started merging into different markets. I came in the same way through Bitcoin, and in the 2017 bull run, midway through, I pulled out and began switching my investments over to XRP, XLM were pretty much the majors at the time. But I will say, you know, now that we're discussing Bitcoin for a moment, there's a big thing going on with Spark and Flare that's connecting and forking off of the XRP protocol. My only input with that is this. There's a lot of adjusting and a lot of effort on the behalf of the investor to, I guess, claim the tokens of this forking, as you need to, well, we'll skip that. It's being shared all over Twitter. I'm sure you're pretty much aware of that. But let's go into my perspective of that. When I had Bitcoin Cash and it forked and I had the BSV, I woke up and boom, I had my equal split in my wallet. I had nothing extra to do. When I invest in VeChain, I get my VTHO in my wallet and I have nothing extra to do. So me personally, as a long-term only investor, I do not do trading, to be transparent. I am not interested in anything that isn't going to automatically just show up in my wallet. If I have to do additional work and possibly lose my digital asset, that's something that I'm not interested in. I'll move on from there. That's all I wanted to say. The next article, we have the PayID .org, PayID. But this PayID version 1.3.0 has been released, which introduces the self-sovereign verifiable at PayID.org or --org identity keys for non-custodial wallets. And another article I'd like to get into before the end of this video, the challenge of taxing proof of stake. Cointelegraph examines the basis of Congress calling out the IRS for threatening to tax proof of stake rewards beyond their actual value. And having said that, the guys over at iTrustCapital are pushing to allow clients to stake their Ethereum very early on in phase 0 of Ethereum 2.0. So just know that regardless of what the IRS does, iTrustCapital clients will always have their proof of stake returns totally tax-free. If that sounds something that you are interested in and that you are concerned with taxation and IRS, please check out the partner link in the description below and see if that's something that can help you, because we're always looking to help investors in this new digital asset class save and keep the most of their money that they can possibly keep. And again, guys, whenever this time comes and you do hit your rocket ship and you launch to the moon for what your goal and your ideal number is that you do achieve, remember, look for long-term protection of that finance so that you are not broke again in the next few years. Try to keep that so that you aren't in any financial struggle for the rest of your life. Take a look at getting financial advice, maybe an accountant or a financial investor, someone that can help protect that so that you may not have to work and you can help others and your family to improve their way of living and receive a better way of life. Here's the iTrustCapital page when you click on the link below. And I'll leave you with your final thought. It is during our darkest moments that we must focus on the light. And again, this is not financial advice. It is for entertainment purposes only. Much love to each and every one of you. Don't forget to hit that like and subscribe, and we will catch you in the next one.